everyone. Myself Ishwar, and in this is episode 6787 podcast by CA Ishwar, and in this episode we are going to talk about many things, starting from quick commerce to latest case studies, or judgments or verdicts from tribunals or dispute resolution panels in terms of income tax matters, and also we also going to touch about expectations from budget 2025 and few more things. I'll brief this episode 6 very short and very brief manner. So, without further ado, I'm going to talk about topic one of this episode 6787 in terms of income tax department is looking to tap Interpol, like reaching out to the various tax treaty countries with India to get information of tax dodgers and their secret assets. So this is one aim that where income tax department plans to utilize Interpol, like international common tax governments, where their government's intention of this foreign income tax treaty countries agencies to just to gather information on tax violators, where in terms of whereabouts, their identities and hidden assets. So this is one aim they're making to expedite actions, like freeze to get their details in terms of bank accounts, so that they will go formally and freeze their accounts to get the outstanding tax demand from them, in case if it is an outstanding demand was there, in case if it is an latest development that where they bought an asset which they have not shown in their ITRs, or where they bought any cryptocurrency and which they have not shown, and where they bought any real estate there in outside India which doesn't have any source of income also, where the department is looking into it to facilitate to recover from them as early as possible. So that is a few aspects that where income tax department is digging out to reach out to this mutual legal assistance corporations from various tax treaty countries. So how this works, like there's a three steps of flow, where in the first step, where they will get the, like, income tax department from India will get data with the tax treaty countries. Second, through mutual legal assistance, they will also get a lot of information in terms of data points. And the third thing is that issuing legal derogatory, where the bill would be binding in terms of non-disclosure matters, or few things which countries will enter into it before sharing it. So this, and one more thing, how this Interpol agencies work is that this wherever once this mutual legal assistance entered by the both the countries, then the both the countries will exchange information on defaulters. Second thing is that where once departments show that that particular class of person or entities are violating income tax provisions of the source country, or the country which the income is secured, or the country where they are staying right now, then income tax departments are this treaty countries using this later regulatory or mutual legal assistance, like MLA, where they can have the power to freeze their assets, so that get the outstanding tax demands, through reaching out to them. So this is one aim where income tax department is digging out to get using Interpol to get more data on the violators. So that is article 1 of this episode, where we are moving to article 2 of this episode, where we are going to talk about quick commerce. So this quick commerce, where it is an interesting thing, it's happening that when we look into broader picture, where the complete quick commerce ends 2024 by the players by doing the business in terms of quick delivery, in terms of we can say a lot of the when we see the quick commerce sector, where food and grocery or milk or dairy products where they're occupied lot of capturing the market. Only small percentage of the market only was occupied by in terms of quick commerce, in terms of mobile delivery, other e-commerce products. So when we are seeing the data point that until 2024, like in the 2024 year, I mean, quick commerce has done the business of $7 billion in India, and the estimates like where we are seeing for 2030 projected would be the market size, considering the optimistic or pessimistic outcome, considering the adverse conditions. Also, the study is showing that the quick commerce market is going to reach by 2030 around $42 billion, which is almost 7 to 42, almost 6 times it is growing. So the market is evolving, though when we are seeing the there is a demand in terms of food delivery and groceries and other e-commerce products where the players are increasing more and more. There is an always this is a demand for the food, so the supply automatically comes. So how the supply comes is the matter like supply chain, where where we are seeing that neighborhood stores or provisional stores where we are seeing the a few places, but in cities like tier 1 cities where getting the neighborhood stores or provisional stores nearby is very difficult. So that is the reason people also getting their lifestyle is changing, so they're preferring quick commerce models, where they can get their needy thing on a quick, very minimal minutes, like just doorstep facility is also available. So there is a lifestyle changing, and there is a supply, and there is a demand for the supply. So and the players also into keen into the market. So there are various factors where we are seeing that quick commerce is growing, and a few factors which are told, but there are a lot of other factors where it is mobilizing in terms of investors also keen in this model of quick commerce only there in India, where the world is not seeing it. So that is also one aspect, that there is an inflow of funds. Then in terms of building the infra, in terms of building many things will come into picture. So that's a quick commerce quick thing. And one more data point which I'm going to tell is that average order value where we are seeing by 2030, it will become 820 in INR. And right now, if we see the average order value in quick commerce is around 200 to 250. So that is also 4 times growth where we can see it. So that we can say that India's consumption by of products or food or dairy products or grocery is growing. So because the population is increasing, the consumption pattern is increasing, and I can say that growth, there is a growth in the in terms of earning power, as well as the industry entire ecosystem is growing. So obviously we can see that there would be more consumption by consumers also, we can see it. So that's about quick commerce part. And moving to article 3, where it's an income tax update, quick update from Delhi High Court, that it has ruled that Samsung Electronic Company's subsidiary in India does not have a fixed place of fixed place permanent establishment, and cannot be taxed by Indian tax authorities, which is the claim made by Samsung Electronics Company subsidiary in India. However, when we are seeing the dispute resolution panel and appellate tribunal decision stated that seconded employees were placed to facilitate Samsung India electronic activities, and does not result any global enterprise of Samsung Korea. So in this background, where department had issued notices to Samsung India Electronics, which is a subsidiary of Samsung, global enterprise of Samsung Korea, in 2010, which is almost 15 years back, under Section 148 of Income Tax Act, where they've asked a couple of information to decide whether they have fixed establishment or permanent establishment in India or not. Where when there is a permanent establishment, which where department feels that it is a tax, it's a taxable activities, and there is a paying, they are paying tax in India. So through seconded employees or through the activities which almost we can say that they can qualify for PE. But coming to this aspect where it has ruled out that where a department has said there are many things that tribunal has pointed out, that where even though there are seconded employees where they are recruited in India subsidiary and providing services to global enterprise, but they told that it is a facilitation of services, but which doesn't result any revenue in India, but it's on the facilitation of services by advertisement and some background which works which is only doing by Indian entity, which doesn't encompass any definition to fit into the permanent establishment given by direct tax code in India, like Income Tax Act. So it's resulting that tribunal has passed the order that they don't have P in India, and resulting and taxable payout to the company. And so when there is no PA, so ultimately the tax benefits like the tax treaties which companies are claiming by of transfer pricing will not resulting to this companies. So that is a one quick update about Article 3, where Delhi High Court has ruled that Samsung Electronic Company Subsidiary India does not have fixed place permanent establishment, and the claim made by cannot be taxed by Indian authorities is were not accepted. So that is Article 3, where we are moving to Article 4, which talks about Reserve Bank of India rolls out. There are some exchange. We can say that whatever the overseas transaction which companies were doing right now, like from Indian companies can open an account. So which says that RBI now allows all banks to open rupee accounts at overseas branches for non-residents to facilitate rupee internalization. So these accounts including SRVAs required where previously there are some prior approvals required, but there is a relaxation now. So which ultimate aim is to reduce reliance on freely convertible currencies and promote cross-border transaction using local currencies, and enhancing trade and investment opportunities. Also one point where we can see, and this is for both for helps all Indian exporters and foreign investors. For example, if it companies A in India which is having operations in US, where right now RBI says that you can freely open an account in USA, but assuming that you have a account in one bank in India, for example, if they have account in HDFC, and they can freely open an account in overseas also like HDFC USA, so that they can freely do the transactions in local currencies, or they can use that funds to repatriate to India also by various payments, or getting the funds to collected from foreign vendors into that US account. So then later it can be transferred to India. But there is also one move that where the banks can do open more accounts for Indian companies. They are operating from India now. So Article 5, where we are, I'm just want to give, as budget is coming 2025 and February 1st. So I have few expectations which I noted from various people. The first, expectations is that, there is a lot of news is going that foreign portfolio investors are, dragging out from Indian stock market. So obviously when there is an FPI is coming, so they come for specific time period with specific interval with specific price band. So and when there is an move that they feel that there are something which the return of investment is higher in other stock markets like other countries stock market, they obviously go up. So I think one quick thing government can do is that where the APIs right now their capital gain taxation is very high. So keeping this point, budget 2025 may relax taxation rate for FPIs where their gains will be taxed at lesser rate, and some relaxation in terms of PEMA, in terms of FPIs, repatriation back. So there is a one thing maybe government can look into it, and second thing is that there is a huge pipeline where there are a lot of crux is involved, that there is a lot of cases are pending at Commissioner of income tax appeals, where there is an faceless was came into picture in 2020. Now after implementing faceless, there are a lot of cases are pending at CIT appeals. So with this move, I think there are some schemes which the government has bought, like Viswa scheme, where by paying some amount, appeals can be dropped and can be quickly get settled from taxpayer perspective. But there would be more fast track in terms of this pending litigation matters at CIT. Appeals will help to boost in terms of recovery, as well as taxpayer perspective. It helps them to settle the case at the earliest possible. So coming to third one is the TDS rate cut, which helps many industries in terms of, and especially manufacturing companies, which they help, like helping them working capital constraint, and also MSMEs. So and the third one is the fourth one is that manufacturing companies booster in terms of tax rate cut, like especially manufacturing means many companies comes, but maybe government can push manufacturing sector by saying that existing manufacturing companies whoever there, they may be expand their capex, so that they'll get the tax rebate in terms of 15%. Right now it may come down to 12.5%, assuming that if they put 100 cr more in investment in capital, like capex. So like that, some schemes to manufacturing sector, so that it will boost GDP and jobs, employment also. So and the last one, which I basically that some relief to employees in terms of ESOPs, or new tax regime, by increasing some kind of rebate. So that are the few points which government can consider for, or I'm expecting that government may consider for budget 2025, which government has said in the post budget after elected, which I can say that previously they had given only for interim budget. Now they're coming with full-time budget, so some full-fledged budget, so something may be helpful. So coming to Article 6, where we are talking about Mahakumbh Mela, which is the biggest congregation festival from India, where news is populating, like a lot of brands from ITC to HUL, like a lot of startups are on the ground to attract, or to facilitate these pilgrims coming from various countries. So the news is that approximately 40 to 45 CR pilgrims footprints can be seen in this Kumbh Mela 2025, which will be up to February month, which will be there. So this is one of the news is that there are a lot of brands in terms of ITC, HUL, a lot of tech companies from startup ecosystem are in terms of drones operating, in terms of movement, in terms of facilitation from the pilgrims is happening at this point. So there's a one aspect that approximately 40 CR means like almost one fourth of the India's country's population is be at one specific desired place, where you can see that that is the biggest thing is happening. So it's we are in this podcast, I want to welcome everyone to experience this Mahakumbh Mela 2025, which is happening in India at Uttar Pradesh, where you can just type Mahakumbh Mela 2025, where UP government has developed their website, where you can check all options or feasibilities, convenience, entire itinerary they had made it very clear. So I request everyone can just experience this, if it is possible by physical movement to going there, or if it is not possible, share this information to your friends, so that people can go and experience it. So Article 7 in this episode, I'm going to talk about CFMS PD account, which is a government account, which we had a brief intro in the last episode. But PD account is a government account where almost all governments in India operate in terms of receiving the funds from the government, like it is maybe central government or state government. We're assuming that when we are going to talk about a particular PSU, the PSU has to operate, right? In terms of operation, they need the funds. So through to get that funds, they open a CFMS PD account. I mean, so through that PD account, funds will be received from uh, like parent to child kind of child, where we can see. So CFMS PD account designed only for purpose driven. So it's not that once money coming that it can be utilized for any purpose. So whenever it's a PD account, we have to check, whenever the fund is coming into PD account, there is a purpose driven. So at the time of audit perspective, we have to check the purpose which it came through challan, like there is a concept like in PD account in government, how it works that there is a PD account, right? When there is a amount is coming, there would be challan number, and there is a challan number, and through that challan number there is a document which we can say GO. So government order, it has to come through government order come challan. So in that government order, government will say it, the purpose of utilization of the fund infusion. For example, if the one PSU got around some 100 CR in one particular quarter from their parent, in the sense means the reporting government entity. So in that GO, if they say that if this amount has to be utilized for sponsorship or government schemes through getting housing for employees, like not for employees, for the public. So it has to be utilized for housing it, so it can't be utilized for ration. So that's one perspective I want to talk about CFMS PD account. So it's a fund, it's a account opened by government, from government. So it may be central government or state government. That's about CFMS PD account. So these are the article, 7 articles at 7 at CA podcast. So where we are going to talk about a lot of income tax cases, verdict, and we talked about quick commerce, and we talked about RBI, a relaxation in terms of opening an US account from Indian bank, Indian company in Indian bank from US, from abroad. I'm saying. So the expectations from budget 2025 we talked about, and we talked about Great Mahakumbh Mela, and also we talked about CFMS PD account. So that's about this episode 6 articles, and I would be coming to next episode in the next week at the same time. So keep listening to my podcast and subscribe to my channel, and I'll make sure that I'll come up with the more episodes. Thank you so much everyone, and take care. Bye bye.